Topic 1. Netflix's acquisition of Warner Bros. And its impact on the entertainment industry. Netflix has agreed to acquire Warner Bros. Discovery for $82.7 billion, which is expected to significantly change the landscape of Hollywood. If the deal goes through, Netflix will gain major assets, including Warner Bros. Film and TV studios, HBO and HBO Max, resulting in a combined total of over 400 million streaming subscribers. This will allow Netflix to offer popular content like Harry Potter, Game of Thrones, and Friends, alongside its own hits like Stranger Things and K-pop Demon Hunters. While this acquisition is likely to strengthen Netflix's dominance in the streaming market, it may face antitrust regulations and political challenges. Concerns have been raised about the impact of Netflix's streaming-first model on filmmakers and the theater industry. Although Netflix has promised to continue showing Warner Bros. Films in theaters, many filmmakers remain skeptical. The deal comes amid competition with Paramount and Comcast, with Paramount arguing that the acquisition is unfair. Netflix anticipates annual cost savings of $2 to $3 billion from the deal, which it claims will provide consumers with more choices and value. Ultimately, this acquisition could represent a significant turning point in merging Hollywood's traditional film industry with the future of digital streaming, but it will require approval from various regulatory bodies, which could take years. Topic 2. Economic challenges and inflation concerns affecting small businesses and consumer spending. Small businesses in the US are cutting staff ahead of the holiday shopping season. According to ADP data, companies with fewer than 50 employees reduced 120,000 jobs in November due to high inflation, decreased consumer spending, tariffs, and economic uncertainty. Some businesses are laying off employees, while others are halting new hires or not replacing departed staff. For instance, Bike Friday, a bicycle manufacturer in Oregon, decided not to replace 3 employees who left due to decreased demand in the US. Down to Earth Living, a furniture store in New York, saw a 10% drop in profitability due to reduced customer demand and tariff burdens, but is striving to avoid layoffs. Malicious Women in Washington had to lay off 17 of its 31 employees due to rising tariffs and raw material costs. Consumer confidence plummeted in November, fueled by high living costs, tariffs, and government shutdown fears. The Federal Reserve is considering further interest rate cuts, despite inflation remaining above the 2% target, due to a cooling labor market. Consumer spending stagnated in September, with many households relying on credit and reducing savings. Although consumer sentiment slightly improved in early December, it remains historically low. Topic 3. Technological advancements and challenges, including Google's antitrust issues and Meta's strategic moves. A US court has finalized its ruling on Google's monopoly in the search market, announcing specific actions. Last year, Google was found to have an illegal monopoly, and in September 2023, US District Judge Amit Mehta rejected the Department of Justice's proposed strict measures, including a forced sale of Google's Chrome browser. This led to an 8% rise in Alphabet's stock, as investors perceived the ruling as having minimal impact on Google. However, some investors still noted that the ruling could hurt Google. The judge ruled that while Google can pay to preload its products, exclusive contracts are not allowed. Additionally, Google has been ordered to ease its control over search data and provide specific search index data and user interaction data. This ruling is significant in the context of technological advancements and challenges, particularly regarding Google's antitrust issues. Topic 4. SpaceX's plans for a significant valuation increase and potential IPO. SpaceX plans to go public with an IPO in the second half of 2026, potentially valuing the company at up to $800 billion.